I'm Sarah Borson-Keto, and in conjunction with NAREIT's REITwise 2021, I'm speaking today with Gil Menna, partner and co-chair of the REITs in real estate M&A practice at Goodwin. Gil, thanks for joining me today.
My pleasure, Sarah.
How active is the REIT M&A landscape at this point in 2021?
Well, on a positive note, we're starting to sign non-disclosure agreements and confidentiality agreements between REITs and private capital and REITs for the first time since the beginning of the pandemic. And so I consider that to be a positive sign. Other than some announced deals, Brookfield buying out BPY or trying to go through the process of buying out BPY, which they announced in January, there hasn't been a whole lot of M&A activity in the public REIT sector, but we are starting to see some momentum there. There's no doubt about that. And I point out I mentioned the NDAs and the confidentiality agreements being signed because we're going to be talking about those at REITwise. And that's sort of one of the first steps to getting a deal done is getting the information shared among the principals.
Are you seeing or anticipating REIT M&A activity to be concentrated in certain sectors?
Yes, I actually think that there's no doubt that certain sectors have been adversely impacted by the pandemic. And the question really becomes whether or not the pandemic has changed the profile of some of the expected returns from those sectors. We've talked about that before. And I think that there might be some need for M&A and rationalization in some of those sectors. So I would think that I would expect that with sectors that are most heavily hit by the pandemic and the pandemic might have had long-term consequences for the attraction of that real estate sector to the general public, there might be consolidation in those areas. Maybe needed consolidation in those areas, and there might be an interest in private equity being attracted to those areas to work them out and bring a different leverage profile to those assets.
What other trends are you seeing in terms of joint ventures, investments in commercial real estate, or other types of capital flows?
Well, I'm glad you asked that question. It's my favorite question, and I've been pointing this out for quite some time. We just announced a deal for RPT. They did a platform joint venture with GIC, Monarch, and Zimmer, and there's a lot of activity there. There is no doubt that global institutional capital for investing in the U.S. and for some REITs outside of the U.S., because we have many REITs that actually have platforms well outside of the U.S., are attracted to storied REITs with very sophisticated management, because it's hard to duplicate that in the private sector. And even for companies like Blackstone that are by definition remarkably good at what they do, they usually don't hold on to the platforms that they create and then use those platforms to exit into the public markets very long, because they're getting that platform established and investing in it and keeping it well groomed and energized is a public company endeavor generally. So asset managers need platforms like RPT to deploy their capital, and so we're seeing a lot of interest in the public sector. We have been for years now, and it's obviously ticking up because people feel like we're coming through the dark side of the pandemic, and people are starting to focus on deploying capital with programmatic and sophisticated joint ventures with public REITs, no doubt about that. On the other side of that coin, public REITs themselves are attracted to that capital, your point about capital flows, because the public markets are still depressed. And, relatively, obviously, we're coming up, and we're no doubt based on where we were in the trough during the pandemic, we're well past that. But those valuations in the public market are still depressed. And so attracting that private capital to deploy into their platform while the public markets come back to a better level is exactly what REITs should be doing, in my opinion.
Gil, thanks so much for joining me today.
My pleasure, Sarah.
And for more news and information on REITs, be sure to visit NAREIT's website, REIT.com.